Okay, we're up. And we're up on multicast.
Someone has a lot of background noise, so we have to figure out what that is.
Is it like kids screaming?
Yeah.
It's me. Oh.
Well, we'll make it fun. Don't worry. Hi, everybody. We're going to get started in a few seconds. Welcome. We're so happy to have you guys here. Hi, Cesar. Hi, Matthew. How are you? Well, let's go ahead and get started. Welcome, everyone. This is a really special week for us because we have a dear old friend of ours who actually lived in our building for many years. So Steve Kaye is the founder and was the CEO of Snow Lizard, but he has an incredible background, and we were really excited to have him join us this week because Steve always stays very humble, very direct, and really has learned by doing through decades in technology and engineering, different startups with huge growth trajectories, exits, and most importantly, has stayed humble and really is very self-aware about the challenges of being a founder and an entrepreneur, and having survived it and succeeded. He always has great words of wisdom that are inspirational and applied. So we're thrilled to have Steve with us today. Take it away. I know you're going to tell us some stories, and then we'll open it up to Q&A as always. Welcome.
Hi, guys and girls. How's everybody doing today? It's unfortunate we're in the state of everybody working from home, but it's not that bad, actually. So my name is Steve Kaye. I'm an engineering background, electrical engineer. I have an MBA. I went to a school here in the United States called Florida State University. Mine starts back, my career starts way back when the .com collapse came through. So that's when I graduated college. So my trajectory started off where there was no jobs. And so the only jobs that were available were through the defense industry. And so I worked with the military background, and I worked with communications. And really, that's when I started getting into product development. So I've always loved to build products. I've always loved I'm a product guy. I just like to build things, whether it's houses, whether it's, whatever it is, I like to build. And so the opportunity came for me to start working in this company where they're building, you know what, I have a presentation. Let me pop that up real quick. Can you guys see that?
Yep.
Okay.
Go ahead and do full screen.
Yeah, I did.
Great, thanks.
So what I wanted to talk about today is kind of like my trajectory. What is some of the stuff that I've gone through startups, through my careers, and the ups and downs, and some of the things that, since you guys are all starting companies, some of the things that I've done good and some things that I've done bad, where you guys would hopefully appreciate what I've been through. Like I was saying, so my first trajectory started me through Northrop Grumman, and that's the top company there. It's a very big company. If you guys ever heard of Boeing or Lockheed Martin, that's the equivalent. That's how big they are. And so I was building, let's see if I have, yeah, there we go. So that picture in the middle where the soldier is, that target designator, I was in charge of that program. So I grew up the ranks, and I did engineering and test and research and development, but I got to be in charge of that program. And so that program, I got to learn everything there is about product, because that product has optics, it has software, it has electrical, it has mechanical, thermals. I mean, it's military grade. So I got to see a lot of the gamut of those things. And so that was awesome, because I mean, you get to learn so much. And then I got married, and my wife is a doctor, so we decided to come back home. And I had a couple of different job opportunities that I wanted to take, but then there was a startup called Alienware, and the Alienware is the one on the left with the computers. I don't know how much of you guys have heard of Alienware, but Alienware is a pretty big computer company. But back when I was there, it was pretty small, right? I mean, you had Dell, HP, IBM, Lenovo, all those guys, Asus. And Alienware was just this little company, started out of a garage, and they were growing, but they were just selling to gamers. So their market was just strictly gamers. So, but there's not that many gamers. Well, by the time we got there and to what it is now, it's probably like a $3 billion industry just for Dell alone. So going back real quick, I was put in here to start getting the engineering team up and going because these guys didn't know much about engineering. They just built computers by hand. They don't understand specs. They don't understand quality, numbers. So I was put in place to help finalize and fix all that stuff. And then we got acquired by Dell. So Dell bought Alienware, and it's still alive today. If you guys go to Dell.com and go /Alienware, that is their whole gaming part of it. And so that part of that acquisition, that exit, I learned a lot from. So that was the best thing about going through a startup, seeing what they went through, ups and downs, financing, how well they marketed their product, from a product perspective, how they got from just building it by hand to getting a process oriented, getting more people, making sure that our numbers were right, understanding KPIs, understanding the customer and how to gear at that customer. That was, for me, it was almost like a PhD in business, because not only did I do engineering, I managed, I ran a lot of the desktop division. So I understood all the numbers and I understood the operations. And so the day came in where, they're like, well, Steve, Dell, we're finally going to make the whole merger together. But, I'm here in Miami, and all the engineering part where they wanted me to manage was in Taiwan or in Texas. And I didn't want to move. So I thought, Steve, you've always wanted to start your own company. This is the opportunity for you to go do that. So I had a friend of mine that we were, he was more in design and I was more in engineering and business. And, we got together, we said we wanted to start some, because we've always worked really well at Alienware together. So we decided to start this company. Now, the company was called Snow Lizard. And the way we got started was we actually sat down in a basement for a week and just really sketched out a whole bunch of different ideas that we had for different products. From computer laptops. I mean, this is back when you can plug in your phone into a laptop and make it a laptop. Those are the type of ideas that we had because we studied the market so much, and the tablet industry and the phones had just blown off. So this is back in 2009, 2010, 11. And so we created a lot of different products, just sketches, first sketches. And then I would figure out how I can do the engineering part, and he would make it look, pretty and, presentable. And that's how we developed our product. So we developed that case there. And so on the top right-hand corner, the cases there, the Snow Lizard, it was a case that I knew that would do well because A, we tested it with a lot of different people and distributors, and plus B, there was nothing like it. So remember, I came back from a military background. Phones and tablets are the new thing. Computers are kind of, not monotone. It's a commodity. But these phones and these cases needed something that power protective and, a whole bunch of different things that you can use for the outdoor industry, which didn't exist back then, right? Like the only thing that was up there was maybe an OtterBox, if anybody knows, it's just protection. And this had battery, it was waterproof. So it has a lot of cool things. And that was the market that we did. And this is how I started the company. I got it on Kickstarter. And I was actually number 12 all time back when I launched it. I raised almost $300,000 in just 30 days. And for that, Kickstarter had just started, within the last year, and that was one of the top selling ones. And that's how I started my company. So with that, I started, building up the product, doing all the specs. I spent months in China, developing factories, making sure they're Apple certified, because everything that we did had to be Apple certified. But that's what we did. And as you can see, I started off with the one on the left. That was the one I did on Kickstarter. That was an iPhone 4 version. I did a 5, 6, 7, 8. I did an 8, and then that's when I sold it. So that was the last one I did. And I did the iPad version too. And the iPad version was still, even now, I mean, Susan's probably heard this forever, but it's still my baby. Like that was a project that I thought I could do really well. I just couldn't finish it. And we'll talk about that in a second when we get into some lessons learned. So again, the way I got started is I had capital that I had from me personally, and I got funded with Kickstarter. Later, as we continued to grow, and we'll talk about them a little bit, as we continued to grow, I raised 2 more rounds of capital to get us into retail and bigger distributions. We're at 1,100 stores at one time. Some of the major stores like Costco, and we'll talk about Costco because that's a lesson learned as you go into retail and stuff like that. So what you guys need to understand about this business that it was being a product is difficult because product is very capital intensive. So you have to try to minimize a lot of the risk you do before you do the tooling part, right? If anybody knows what tooling, that's when you create the plastics and do all that stuff. And the good thing is that things have changed a little bit now where you can do rapid prototyping, it's cheaper, but really understanding your planning, your market, like all the parts of business besides the product to understand that you're going to be successful. Because once you make that investment in tooling, my tool was probably close to $200,000, right? If not a little bit more, just the tooling part. And materials, and we had to order at least 3,000 to 5,000 minimums, and our product was not that cheap. So you really have to make sure you understand the business part, plan it. That's why the power deck, your presentation, your deck, where it shows not only the product, your customers, your revenue cycles, all that stuff that you need to put on your deck. That's why it's important that you plan as much as you can before you go ahead and execute on a particular product. So some of the things that to me still resonate today, if I had more time to kind of plan things right, and obviously I didn't know what I didn't know back then. So that's another thing you need to understand, that I just went forward and I thought I was a great product guy and I just needed to create the product. But if you start really understanding the business part of it, and start really getting your markets and understanding how much everything needs to cost, it's okay. So that's the one on the left. That's kind of the guy not really planning as in himself off there. The other one, this is Google Glass. I mean, Google Glass, this is $1 billion company, almost $100 billion company, and they launched this product and it failed completely. Why? Were they being too innovative? Did they test the market? But that was an epic failure, right? And obviously, if you test the markets and all that stuff, Lifesaver, like that pineapple Lifesaver drink, that never did really well. No one ever heard of it because it didn't taste good. They probably didn't do a good job testing it. And we're going to talk about teams. We're going to talk about, capital. Capital is another issue that you need to work about when it comes down to products. And we're going to talk team. I mean, team. That's one of the biggest lessons learned for me too, is just making sure what you don't know and try to help that. And as I've grown through the industries and helped a lot of companies and mentored and some board of advisors, I've seen that team is a big deal. So we'll talk about that one by one. And I'll tell you like my specific instances where I failed or I didn't execute correctly, and what I think now that I know, what I would have done to fix it. So let's go back to when I first started it. So when I first started it, I started back, and remember, I'm Dell, right? I was director of engineering at Dell at Alienware, and I would go to China to go make sure our factory line was going well. And I'm dealing with one of the biggest manufacturers in the world, actually 2 of the biggest in the world. And so when I would get there, it would be like, roll out the red carpet. Here's Dell, here's Mr. Kaye. They would show me, I'm with the executives from the factory, big time stuff, and it's great. But when you try to do it yourself, and I try to talk to those guys that I make good relationships with, they're like, look, Steve, I'm sorry, but you have to get to these amount so you can start with our factories. We only do like 1 million at a time. Like you only want to do like 25, 50,000. I can't do that yet. So then they kind of ship you off to the level Bs and the level Cs. The next thing you know, you're going into the back of the factory. And so that understanding of everything that you need to do from a testing perspective, quality control, SOPs, like that part I was good at. So, but I had to build that into this new little factory that can support me and are willing to take the risk in me as well, right? Because they're gonna make an investment in time to make sure that I can sell, but they're not at what I need them to do. And I can't find a factory that does waterproofing, electricals, mechanicals, solar. Like these are new. I'm trying to introduce new technologies, and maybe I was being a little too advanced, but I had done it before, so I figured I can put it all into a case. But what I didn't know is, Apple certifications and all that stuff. And so where I got my biggest issue here was that with that little factory, I didn't have an opportunity, because I didn't have a lot of capital either, is I didn't have the opportunity to get second vendors. And so the one factory I had actually lost their Apple certification, and I didn't get product for a while, and that almost ruined me. So kind of understanding like the consequences and the quality and the testing and making sure that your product, and this also goes into software stuff, but just the hardware stuff, making sure that you understand the hardware part of it and who's going to build it and how they're going to build it is number one for me. That was the biggest issue for me. And I'm an engineering guy, so it was tough. And I remember one of the guys on my board was the CEO of Alienware. He would tell me, he's like, man, Steve, manufacturing is going to be the hardest. I'm like, I got that. That's what I'm good at. And he's like, Steve, it's not the same. He was right. But anyways, that was lesson number one. Lesson number two is now that you got, well, we talked about the failure to do it. So let me go back because I got sidetracked. The second part was, this goes coinciding with manufacturing. So the second part was the quality control and the return process. So as you continue to grow, and my product was so different, and remember, it's waterproof, and so if it falls in the water, and people are going to be upset if their phone leaks and all that stuff. That wasn't stuff that people were used to. Like the only companies that were doing that type of stuff was this company called Lightproof, and that was the only waterproof case company that was legit. So I had to understand the risks, the return rates, because if there's issues with that, how am I going to insure it and do all that stuff? So that whole manufacturing process literally is lesson number one and lesson number two all put together. If I couldn't deliver the product, or if I had high quality issues, and I did have high quality issues. Well, I was in a retailer called what was it called? West Marine. And if anybody knows West Marine, they're the biggest kind of marine retail store. And we had all of our cases in there, but they had this process that they would return anything. So a lot of people would just go on their boat, use it and then return it. And I would check these all out to see if there's any issues with the product, and there wasn't. So understanding that whole return process, the refunds, the quality, getting the feedback from the actual customers, and doing all that that was lessons number one and two. Going back, because this is something that I forgot to mention, going back to the whole process of me starting through Kickstarter, the reason why I knew that this was a good product was because we did a Kickstarter, and the good thing about Kickstarter is I can get to talk to the customers. So we had, I think it was like 950 customers that paid for the product. And I have a direct relationship with every single one of them. I have their emails, I have their phone numbers, I have their addresses, and I would ask them surveys and questions, because the good thing about these guys is that they wanted to help you build your company because they love what you're doing as a product. And they saw my team, they saw my background, and like, yes, we'll invest in you. So that was the good part about Kickstarter. The bad part is that they're ultra critical, but it's good. It's always good for the business. So let's talk about lesson number three. Sorry to jump back around a little bit. I just wanted to make sure you guys understood why, for me, the Kickstarter opportunity helped me launch the product, and how I got into the relationship with the customers and understand what's good, what's bad, and all that stuff. All right, so we go through the process. We finally get all the kinks out, and now we're growing. So we're getting in retailers, and I have this opportunity to get into Costco, and Costco's super excited. We've never seen anything like that. So we do it, and there's two things I didn't know about Costco. Well, I did and I didn't know. I didn't think it was going to be that bad. Is that Costco, when they buy things, they can return it forever, and you would have to take it back, no questions asked. So as a startup, you're thinking, that's awesome. Like I just sold $25,000 in a week, but you're getting a 25% return. That's catastrophic for us, right? Like I'm in 45 Costco's and I'm having all these issues, and a lot of people are returning. And not only that, I'm making an investment to do the trade show. So I'd have employees at different Costco's working in, and that's money that's sunk. And it turned out to be not as great as I thought. We kind of probably broke even. It got our market share out there, and that's probably a good thing. Like people started recognizing more of our brand, but it wasn't as profitable as as I wanted it to be. And more importantly, I probably could have invested that money somewhere else in the business where I would have got a better return. But those are the things you don't know, right? Like, for me as an owner and a first time real startup for myself, making sure that I can get into like a Costco or a Walmart, to me, like that was amazing. But like you said, you really have to understand who your customers are. In this particular case, Costco would have not, if I would do it again, I wouldn't have done it. I probably would have focused more on e-tail and retail and kind of worked more on that digital presence, and maybe some partners in retail that could help us grow with an impact. But that was lesson number 3. Okay, so lesson number 4. Look, every entrepreneur is gonna, oh, I need money. Oh, I need money. I need capital. The answer is going to be yes. You do need some type of money, whether it comes from mom and dad, whether it comes from friends or family, whether it comes from angel investors, whether it comes from Kickstarter. You're going to need something to get some things going when it comes to hardware. You're going to need to make some investments in travel and prototyping and whatever the case may be. But you do need to understand the money plan, right? So one of the things you will need to do is really understand the finances of your company. Try to plan as much as you can beforehand. Understand how much capital you need, how many people you need, what your product costs, what your shipping cost is, to and from, how much money you're going to spend on marketing, and what is your marketing plan. So I wasn't great at that stuff, but that's stuff that I really focused a lot because I needed to understand how to get all that stuff ready off the floor. And one of the other things that I really started to understand were the KPIs of each thing. So once I started understanding KPIs, like of my return on investment on a particular investment for marketing, for example, digital marketing, how would I go about doing that? And understanding the cost impact to the business. And to be honest with you, it makes our decision making a lot easier. And you're able to concentrate and see the returns and then kind of keep on growing that way. So understanding the plan financially will make sure that, to be honest with you, that's probably one of the most important things that I learned. Last thing is team. So this is another big mistake. And I'll call this a mistake because I didn't know better. So when I built the team, what I know now is I built guys that I can trust and guys that are going to go get the job done. What I didn't plan for was people that I wanted to be smarter than me and that can do things on their own and just think and build it like that portion of themselves. So I'll give you an example. I was the engineering guy. So I brought in a guy that would just help me do what I want to do. What I should have done was bring in a person that was like me, just maybe different, but that can go off and do that stuff where I can go focus on the future of the business or fundraising or sales development. And that's what I did. So I did it for good things, right? For sales, I'm not a sales guy. I'm probably a good sales guy, but I'm not a sales guy. Like I'm not going out there and selling things. I brought in world-class sales teams. So that I did good. What I didn't do is I didn't do marketing pretty good either. PR, I did. Those are the things that I wish from a team perspective. And I brought in a lot of people that were either family or friends that I trusted. But I wish I would have brought in more people that were great at what they did and that can just build it off by themselves. So people, your culture, if you guys get to know me, I'm a pretty laid back. I'm not a micromanager. I like people to do their own thing. It's okay to fail. Just make sure we build a plan, execute it, and give me the results. I was pretty good at that stuff, but I didn't have those people in places where I needed to make sure that they were going to be successful. So that's on me. My culture, was very calm. We worked hard. We hung out together. Like, we did a lot of cool things. But it's one of the definitely things that you guys need to make sure that you build, that you have a good understanding. I built that after the fact, not really before the fact. So that again goes into planning and all that stuff. But those are the 5 lessons that I have. Quality, sales, financing, and team. To me, those are the lessons learned that I've been through, that I went through, and that I was very successful with. And at the end, I learned more than just the learning alone was worth it. Moving forward, if I do have another startup or join another company or whatnot, I'll be make sure to apply everything I've learned so far. So this is something I like to leave it at the end, because being a startup, and you guys, it sounds like a lot of you are just starting to start with this. It is the most difficult thing that you will do. It's extremely difficult. It's, I wish you can ask my wife how many times I've cried to her because I was just frustrated, or things didn't go out my way. You think you're going to lose all your money, whatnot, or, you have financial issues. It's extremely difficult, but you want to make sure you plan, and if it ever things, just don't give up. Keep on working hard. There's always there's always tomorrow. It's not the end of the world. Just keep pushing forward, keep on planning, keep on executing. And, if you're not successful in this, I'm sure you'll figure it out, learn, apply the lessons that you learned, and you'll try it again. I think that's it. Oh, so I had these on here from before, but, I think that this is one of the few things that I wish I would have done before, like the lean canvas, and really understand, like, if you really go through this and understand every single part of this canvas, it gives you a much better understanding than a lot of people do when they just do a startup without really thinking about it. So really take the time and understand the lean canvas, what the benefits are of it. And I'm sure the team will help you provide this, because I got this from them. And Uber, you can present that to Uber, and I'm sorry, you can understand what Uber went through. So I think that's it. Let me open it up to questions and comments or anything like that.
So a couple of interesting questions that have been coming in. So is it better to trial with a limited production run on hardware just to test and see if a product will work with a desirable market? If you can explain what that means to non-hardware people and kind of walk through the decision process, that'd be awesome.
Say it one more time, Susan. I'm sorry.
Sure. Is it worthwhile to trial with a limited production run on hardware just to test and see if a product will work with a desirable market?
No. The answer, absolutely no. So the reason why is because you can't just test. You can test it. You can't test a real physical product in the market without tooling it. So the only way you can do it is by prototyping it. If you're thinking about just prototyping and showing it to people, getting their feedback, we did that. So I highly recommend that. If you're actually testing, like building, 5,000 or 1,000 units, then the answer, and this is just hardware. I'll get to the software part. For hardware, no. The answer is, like, if you're going to go to a product and you're going to start selling it, you need to tool it. So the investment's there. It's a big investment. So make sure you understand that. From a software perspective, of course, yeah, that's the benefit of doing software over hardware. Software is something that you can go ahead and have, whatever software, whatever you want to try to sell, you can start showcasing it. And as long as the product does what you say it's going to do, you can start selling it. Now, obviously, there's going to be iterations and improvements as you continue to move on. But that's the main difference between software and hardware. Did I answer that question, Susan?
Yeah, but let's talk it through a little bit. So someone starting a hardware company with nothing, what's the process for testing, validating, market, product fit, even pricing? Like, can you walk us through that process?
Okay, so from a hardware perspective, Um, Understanding the finances. So, all right, the way we did it is we got we sketched up our product, so we prototyped it. Then we had like 5 different products that we did, right? So we would actually get a portfolio or a presentation and send it to distributors and people that we knew in the industry, or to get their feedback. And out of the 5, the one, which is the case that we made, would always pop, hey, look, this is a good idea. No one's really doing it. I think this would be the best case scenario. So that's the market feedback, right? So now on paper, we kind of isolated that this is the one product that we want to do. So B, then we start doing competitive analysis on it. So we started understanding, well, who leads this market, right? Like if it's, and by the way, there was nobody in the market that's really doing what we're doing. So we had to get the best case scenarios for waterproofing, the best case scenarios for battery cases, the best case scenario for rugged cases, and the new category, a solar case, right? So I had to go into all these different industries and kind of extrapolate how much money do you think people will pay for this? So that in mind, that's not the goal, right? Like I have to see what the market would pay for that. So I did investigation on that, whole competitive analysis. The third part was, okay, we've identified the product. We think we can sell it around this time. What do you think it's going to cost to make? And so I'm in prototype phase. So in prototype phase, you actually build all the different products on software, right? On CAD. So with Pro E, I know we had to tool 19 different pieces, right? That's 19 different tools. So I knew the plastic cost. I knew what so I started to build up a bottoms up approach where from the tooling to the plastic pieces to the battery to the solar panel, and I built a BOM, so which is a bill of material, and I priced everything out. And so that would give me a unit cost of what I think I can do it, and then you have the R&D cost of capital, right? So that capital of investment needed to last me 2 years, plus the unit cost and what I can sell it for. For having those 3 things, I would know what my gross profit would be. And then gross profit, see, this is all about P&L, but it really is like the brain behind a business. Like if you want to do this as a business, you really understand the business part of it. So understand the costing, the R&D, like the capital expenditures, the shipping costs, and then you build out all your team. And then is it going to make money? Well, then, okay, maybe not in the beginning, but if you do, 10,000 units and you go to 20,000 and 30,000, and then where's your return? Do we start making money after year 2? And then can you scale that? So that's the next big part, right? Can you scale, and how do you scale that? So I knew I could sell 15,000 units. So I knew I was going to be profitable on that first one. But remember, I had to go from iPhone 4 to iPhone 5. And that, for me, you needed to redo tooling. So it's another investment. So you have to take all those things into consideration. But that's how I started. But it is the finances, understanding the nuts and bolts of your product, make sure that you price everything, and that you have a market. So let me go back to the marketing part. I understood from Kickstarter that my market was in the outdoor industry. So I narrowly focused in the marine industries and the outdoor markets, like the soldiers, for example, policemen, hikers, everybody that's outdoors, that's all the time, that want to use their phone, they couldn't, either for business or for pleasure. That's who I focused my ultra marketing. So when I did campaigns, and we grew our Facebook page to 50,000 followers in 6 months because we were ultra targeted. We didn't go buy ads. It was very organic, and we grew it. We were getting 50,000 visits to our website with a very good conversion rate, around 5%. Those are the KPIs, like all those numbers that you start putting together. That's what kind of builds a business correctly. But that's what I did from a hardware perspective, from idea to product to customer ideation, all the way through a little bit of scale.
Well, let's pull it all the way back even earlier. So with a software prototype, your MVP, your minimum viable product with software could be a website, right? It could be even a PowerPoint just to show people the flow and understand what that looks like. What's the MVP for hardware where you can actually give a potential customer something to interact with and check out, totally, because most of the people that we're involved with, they don't already know people in the hardware industry where you can send specs, right? And you can send blueprints. What does it look like from an MVP standpoint in hardware, before you're going to tooling, et cetera?
So it depends who your potential customer is. So it could be as just a software simulation. So you do there's a Pro-E. So Pro-E is a software you use to build product, where you put all the pieces together and it kind of forms the model, and you can 3D show it, and you can break it apart and show everybody that. The next step from that would be a prototype phase. So this is, rapid tooling or rapid prototyping, where you mass produce all the building, then you build it all together and you can start showing people what it is. But that's pretty much it. It doesn't, it's not like software where software you can spend 30 straight hours, coding and getting a product out, and then showcase people, get the feedback, come back and fix it. It's a little bit different with hardware. Hardware, you can simulate it, but it's really hard to show the simulations to people that are going to give you that type of feedback, because they're just going to say it looks pretty or whatnot. But for you to actually have it physical and ship it out to a couple of different people to get their feedback, that's the differences between software and hardware. I feel like, do you guys, am I being understood on that? Because it's really different.
Really,
okay.
that's clear.
Okay.
So let's talk about when you're looking for distribution, those retail partners. How do you go through the process of finding the right retail partners, and what does that look like when you start pitching them, and what are the numbers there? Like if I'm putting something out to retail at $149 or whatever price, can you break us down on what the pricing actually looks like?
For me, it started how do I identify my customer base? So like, again, I went to Kickstarter and I knew who my customers were. So I asked, where do my customers shop, right? So they all, whether it's Bass Pro Shops or all of the outdoor stores or the marine stores or the Navy exchange stores, like these are the places where I was at. So I knew my customers shop there. So what I would do is I would get, I had to find sales reps, because it's very difficult. Sorry, that's a great question. So it's very difficult for you to knock on Bass Pro Shop's door and get an appointment with the buyer, right? It's not that easy. So what you need to do is you need to find out who are some sellers, like, they're called reps or buying firms. And you can do this yourself too. I mean, you can start emailing people and try to get emails or meetings and that way set up. The problem is that once you do get a meeting, you have to travel there. It's not like maybe now with COVID it's going to change a little bit, but before you would have to go. So if Bass Pro Shops is in Missouri and Target is in Minnesota, like I would have to go travel all that stuff. So you need to make sure you can afford that, first of all, right? So I actually had reps that you pay a commission on everything they sell. So for me, it was 5%. So everything that I sold through them, they would get 5%, but they would be the main customer. So they would rep with us. Now I would go with them and pitch the product, because I didn't think anybody could pitch the product better than I could. And we had a very good reception. And that's how we got into retail stores. But you really have to, again, it's part of your team, right? It's your sales team. It's sales. For me, I contracted them out. They're sales reps. We got a good relationship. We would talk a lot. They understood the value proposition, and they made the investment in time to go do that, because you're not paying them. You don't want to pay them up front. You want to make sure that they're making the investment. They believe in the product and they're going to pitch it for you. They only make money when you make money. So that's what I did with that. Now let's talk about the cost structure, because I think that's really important. People always think that retail is what people pay for it. No, there's many iterations of distribution. So let's talk about the top, right? The top, for people that know, let's say Walmart. Everybody knows who Walmart is. Whatever that price is at Walmart, and we'll give it a price of $100. Your product retails. That means the consumer can buy it for $100. Okay. Now let's work the other way now. So how much did it cost you to make that? Remember we talked about pricing your product per piece, per shipping. And so you have a fixed cost of what it is landed at that retailer. So for me, let's say in this case scenario, it was $25. $25 included all the batteries, all the plastic pieces, the shipping from China to their warehouse, all that stuff, right? $25. Now, how do you think it gets to Walmart? Do we sell it directly to Walmart? Most of the times, they want to make sure that there's a distributor that takes that stuff, because they don't want to warehouse it for you, and they don't want to make the commitment on bringing in 50,000 units not knowing if it's going to sell. So they'll try it out. So they'll buy an intermediary, which is called a distributor. So the distributor is going to make a little bit of money as well too, right? Because they actually are your customer. I don't sell to Walmart directly. I sell to the distributor that's going to buy everything, and they're going to help ship it to Walmart. They're going to ship it to Bass Pro Shops and to whatever other stores. So that margin, so you have the consumer, you have Walmart, then you have the distributor, and then you have our costs. So that's how the pieces get split up. So from your $100, if you take in hopefully $40 to $50, that'd be ideal, right? You want to be above 40% margins for a manufacturer like what we did. Some things are, that depends on the product, but that was my goal, to be above 40 to 45%. So that means that if my cost was 25, I wanted to be at least 45 to the distributor. The distributor then would sell it to, let's say Walmart so they would buy it at 45. They would sell it at like 55, make 10, 20 points. And then 55, Walmart would sell it to 100, and that's where they make their money.
So that kind of takes us into two different directions with the next question, because it seems as though it'd be obvious everybody should just try to sell direct online, right? And then you're not cutting up your potential profitability and spreading it across distributors, retail, etc. So I want you to think about this next question in what does the unit economics look like when you're going direct to consumer versus to retail, number one. And number two, I think that kind of really nicely dovetails into crowdfunding, because you did go direct to consumers to kind of get the initial funding, right? So can you kind of go through crowdfunding and as an alternative as well?
Okay, so yes. So going straight to consumer is obviously the best way of doing that. So I did, right? So remember I told you guys I was getting 50,000 people on our website on a monthly basis and good conversion. So we were making good money on the website. Now, the problem is that if you want to scale that, right? So what are the pros and cons about that? So if I go through Walmart, they have endless amount of eyes on it. There's so many different stores. Each store is going to buy 5 or 10 units. Your numbers just they go up really significantly high, right? But a lot more people are taking that. So when you sell direct, all the marketing is on you. So you have to do all your digital marketing, all your branding. Everything needs to come to this one website. In our case, whatever your brand name is, and that's where they buy. So you have to make that investment as well. So I chose to make an investment in both, a little bit of both. Retail, and so my investment there is with the sales teams, with the travel, with the marketing material. And then I made an investment on this side to make sure that my branding keeps on going. Like I have to do my part. I have to brand it. I have to make sure our website's getting the hits. I would need to make sure that the website looks beautiful, that there's conversions coming from different places, that we're doing advertisements to go back to our websites, whether it's print, ad, or digital, associations and partnerships. So that's a marketing cost. So you either way, like you have to think about what's going to be the best. I didn't know at the time which one I was going to do better, so I did a little bit of both. I didn't do it great on either one because I wanted to see which one. In hindsight, there was this, there was this moment for me where I should have done more of the digital straight to Snow Lizard and grown that, because the margins are so much higher, right? So like what we were saying, if it's $100 price point and it costs me 25, well, that whole spread goes to me. Now I did have to pay for marketing, I did have to pay for that stuff, but that's all mine. So those are the pros and cons of doing that. Now, you as a brand, and I came from Alienware and I came from a lot of bigger companies where branding is really important. I knew I needed to go to the consumer. I needed consumers to know who I was. So the opportunity through Kickstarter was a no-brainer for me. And dealing directly with the customer and seeing, and by the way, so this is how, just because you're on Kickstarter, doesn't mean you are going to be successful, right? Again, Kickstarter is what? It's a page. Just like my company had its page, Kickstarter is just a page that has your name on it. How many pages are there in Kickstarter? 10,000, on a daily basis. So how do they know about your product? So again, it's marketing. The way I did it, and I don't know if it works anymore, but the way I did it is I literally had $5,000 and I invested it in a PR agency, and they're actually one of the better ones. And I said, look, man, I need to launch it. And they did a whole Kickstarter campaign, and it got picked up by some Engadget and some major people. Remember, this is kind of in the beginning, and my Kickstarter got flooded. And so one day it was 10, 20, 30, like it just kept on growing from there. But that's how I did the Kickstarter. And the Kickstarter for me was awesome because I got to interact with customers. I'm still friends with some of those people from Kickstarter. You work these relationships and they want to help you and they like it, and you always try to help them in the future. But Kickstarter and the end customer is the most important thing, because that's who you want to keep your pulse on them. You want to understand what they're feeling, how they're feeling about your product, about your brand, brand recognition. All that's super important when it comes to hardware.
So what were some of the big takeaways for doing a successful crowdfunding campaign? Obviously, PR looks great to a lot of these potential to make that upfront investment in helping you build a company.
No, you froze up on me, Susan. Say it one more time. I don't know if it was me or it's the system. Yeah.
So, no, it's definitely me. So, with what are the big takeaways, lessons learned on running the successful crowdfunding campaign? Obviously, the PR helped a lot, but what else do you think made all of these different customers take a chance on you and make that investment into a product that was really brand new to the world? So
for me, and by the way, I tried to do another Kickstarter and we didn't launch it, but I was getting ready. So I had learned a lot too. So the first thing that people look at is who you are and what your team is. So we would make sure that, we did come from a good background. We had Alienware experience in Dell and all that stuff. So they want to make sure that they understand what your team is, first and foremost. Second, you want to make sure that you're further along. So you don't want to be in Kickstarter. You don't want to be just an idea. And I don't think they allow ideas anymore anyway. I think you have to have a prototype or some functionality in it, and really make sure that you demonstrate, like if you would on a website, what is your product solving? Why would a mass amount of people like it? Make sure you identify with what customer base you are thinking is going to take your product. Because nowadays, Kickstarter's changed. You're going to have to do that marketing yourself. So I'll give you guys an example. So I invested $5,000 in my first campaign. Nowadays, it's not that easy. Nowadays, you have to drive digital marketing to traffic to that. So another thing you guys might want to think about is and it's different for everybody else, but maybe it's not worth it for you. If you're still going to make that investment to go launch it on there and they're going to take a percentage of it for you, maybe you do the same investment if you're really good at digital marketing and driving that traffic. You might as well drive it to your brand name as they continue to grow, or you might want to hold it. But regardless of the case, you're going to need to invest in bringing eyeballs to that page. So figure out, what's the best way of doing that. Digital marketing is probably the easiest and most cost-efficient way of doing it. But, think about that. Then lastly, it's once you get the product and you understand your market and people are coming in, is your delivery schedule. So make sure that when you're building something on there, that you provide detailed information, because this shows if you know your stuff or not. detailed information on when you're going to deliver your product, how you're going to deliver it, what the schedule looks like. You know, we're going to get funded by this date. We're going to do prototyping by this date. Then we're going to do phase 1 of tooling, phase 2 of tooling, phase 3. The next thing you know, there's those, oh, I'm going to deliver in 2 weeks. That's not true, right? It's really going to be like 4, 5, 6 months because of how long each process takes in the development schedule. I mean, we can get into that probably later, but the development schedule to build something from tooling is it's extensive. I think I answered all the 4 major
that
parts.
goes into yes, you did. That goes into a couple of other questions here. So you talked about prototyping software. Can you mention a few prototyping software that you've used that you like for people who are interested in starting down that route?
Sure. For mechanical purposes, Pro-E and is kind of the, you know, it's that whole software suite is probably the #1 used in the world for mechanical building of products. So it is a product designers, that's how they start building things. They have material, product, all that stuff from a mechanical perspective. From an electrical perspective, and by the way, you have AutoCAD as well, and you have other programs, but mechanically, Pro-E is kind of like the best one out there, in my opinion. Electrically, from a software simulation stuff, I don't know what they use nowadays, but PSpice and MATLAB and all these other ones that used to kind of put all together from different perspectives, whether it's, you know, physics and mathematical equations for MATLAB. PSpice was a circuit analysis tool that we used to use. There's just different types of software that we would use back then. What else did we have software-wise? Prototyping. I can't think of any more I mean, I'm sure there's more. I just can't think of them right now off the top of my head. But from a product perspective, from a hardware perspective, it's definitely Pro-E. And by the way, so when you do prototyping, most of the prototyping machines, that's what they take is Pro-E software. So they, you know, you code it, you put it into the software, and it builds it for you on the rapid prototyping machine.
Okay, another questions. What can I expect when it comes to manufacturing deadlines? How common are delays? At what point do you change manufacturers?
That must be the hardest question I've ever heard in my entire life. So there was multiple times that I wanted to switch manufacturers. And the reason I couldn't is, that's difficult. The reason I couldn't is because I didn't believe, well, they made me believe A, that the issues weren't that big, they were going to resolve them. But B, it's when you do physical hardware, remember, it's a tool. I mean, I don't know if you guys know what a tool looks like, but it's, I mean, I have to lean back. It's like that big, and it's heavy, it's steel, it's huge. I mean, you need crates and, you know, cranes to move them around. They're you know, they're not small, and they're heavy. They're metal or heavy aluminum. So machining for me, A, it's expensive, and B, all right. So in the development process, you have these tools, right? So they're the metals, and what you do is you shoot the plastics through the tooling, shoots it up, and that's how you get your piece. But there's two parts of it that need to fit together. The whole system of squirting the plastics into the tool, the pressing, the cooling, open and shut, cutting, that's a whole new development that goes together that the manufacturing teams do. And when you're going to pull these tools out and then try to do it with another factory, they're going to have to retweak it because they didn't design it. You know, it's not, they're kind of trying to relearn it, and that takes time too. So delays with factories are common, like seconds going on a watch. Like, it's just going to happen. What you need to do is make sure that you built in time for that and try to get commitments. Now, if you have the opportunity to punish them because they didn't make critical, and I would do that, by the way, if they missed a very, like, for example, for Costco, I had to make a delivery on a certain date. If I missed it, I missed the whole thing, and I would have lost hundreds of thousands of dollars. I told them that they didn't make that, you know, then I'm not going to be liable for it. You would be liable for it. And they, oh, no. So they would work day and night to make sure they do it. So deadlines are going to be missed. I mean, it happens every day with software, hardware, Susan's company, everybody, they miss deadlines. It's how you react towards it, how you plan for it, and how you move forward, and execute on that. Because there's going to be problems. It's just recovering, how to recover from this issue and getting on to the next phase of development cycle.
What role did advisors or board members have in helping you with decision making?
Huge. Okay, so I had this question asked me last week too. So I'm going to give you his scenario because I thought it was really cool. So this guy's company, he's grown it really fast, and it's a service company. And for me, it was just, you need so you can get a company from point A to point B. Or like I said before, I consider myself a very gifted product guy. But I'm not gifted when it comes to finances. I'm good at it, but I'm not gifted. I'm not gifted at product, at marketing. I'm not gifted at operations, logistics. So in building my team, and I had a board team, I wanted to make sure I had an expert in product marketing. I had an expert in financing. So if I needed to raise more capital, he would help me figure out what to do. I had an expert in operations and distribution, and I had a 5 board member. And my other one was, I think it was either finance. I think it was finance, like strictly financial overseeing of how the business was being run. So for me, it was ultra important because what I don't know is what I need people to help me out with. And that's something important for everybody on this call. If you don't know something, make sure you A, understand that you don't, and B, raise your hand and make sure you have someone to help you answer that question. So going back to the example of him, he is a one-man show, and his company has grown tremendously, like very big. And he has no one. I'm like, well, who's helping you with operations? Who's helping you with, like, you're grown so much, like, where's your software systems? Like, you need systems in place. What are your KPIs? And, you want to raise capital. Like, why are you raising capital if you have capital? Oh, I want to bring a partnership, but, your CFO should know that you can borrow money or a line of credit from a bank without a problem. You don't need to give up any equity in your business. So going to the meat of the story is that if you build yourself around you and set up, and so he says he has all this stuff, but he didn't meet with them that often. I'm like, look, man, for me, I met on a quarterly basis. I made it was like a holiday. You guys all have to come in. I will treat you to breakfast, lunch, and dinner, hors d'oeuvres and wine if I needed to. But I would have everybody in the conference room all day. And if I had to pay them a little bit extra, then I would. But I needed to hear, and I needed to be drilled on of the things that I didn't know or they thought I was doing wrong. Either I defend it, or I would pivot and change, or I'd bring the team to make sure that we can solve it as a team. But a board of advisors are critical. Now, in the beginning, they're not called board of advisors. In the beginning, they're called mentors. And so mentorship is super, super important. So whether, you want to have a group of people that you can talk to, again, for those specific things where, hey, man, can I pick your brain on something? Hey, ma'am, may I pick your brain on this and finance and all that stuff? So it's ultra important. Start talking to people that you trust, or find people that would help you advance your business. There's nothing more important than that, for sure.
Couple more questions. What should I keep in mind with cost projections for manufacturing?
What? No, so cost projections for manufacturing. So I'm assuming that the unit cost, they have to sign off on that. So they have to send you the whole BOM, and they have to sign off on the actual part cost. They can't increase that on you as you grow that. So all that needs to be finalized before you start the tooling process. Because once you tool and then they increase the price on you, and your company's not viable, then it's, you're going to lose money and you're going to fail. So all that needs to be discussed, signed off, negotiated well in advance if you start in tooling. That's point blank.
I think a lot of people I think a lot of people who may be joining us today, you know, when you come from software, you may say, oh, I want it to be like this. And then they do some designs and you have a bit of a roadmap, let's say, and you can just keep adding features. And every meeting, every time they do a demo for you, you can just keep adding stuff. That is not how it is in manufacturing.
No, not at all. No, it's, yeah. Like I said, the prototyping phase is your last, like when you start sampling it and right before you turn on the tools, that's it. You're set. You can't, I mean, you can change modifications here and there in the tool, but nothing like that's super important. No.
Well,
yeah.
I'd love for you to share with everyone, because I think the acquisition of Snow Lizard is one of my favorite stories, because it just so complemented every aspect of what you had been building for so many years. So we had a question earlier around, you know, successful fundraising. So could you talk about each of your fundraising rounds and then
Sure.
eventually that acquisition and what you learned over that time as it relates to types of investors you want, what you learned from them, what that dance looks like?
Sure. So my first investment came from me personally, from my pocket. My second one came from Kickstarter, so that was close to $300,000. All right, so that was just to get the product, to get my first real batch of, I think it was 15,000 units. Then I needed to scale, so I raised another round of capital. So this one I did go through the whole process of, it was my first time doing a pitch deck, investor decks, you know, meeting with different, you know, investment groups, angel teams, all that stuff. And so I had been pitching for like 2 or 3 months, and I went to this one investor meetings. It was an angel fund in Tampa. No, yeah, on the west coast of Florida. So it doesn't matter. And so I pitched a group of investors, and there were a group of investors of like 40 or 50 investors in the room. And I'm pitching my company and the product and all that stuff. And by that time, I already had product and we had sales. And we had good sales for a 2-year-old company. And so they collectively, because they had to agree on it, and one of the guys from there really liked it. And he was in the industry. So he did distribution for gun distribution parts. And that's what his company did. And so he said, all right, Steve, let's do this. Let's go test it. And if it does well with our, you know, there's a big trade show in Houston. If it does well, we'll make the investment. And I'm like, okay, so let's go to Houston. So he packed me up and went to Houston. Literally, it was the next week. So I had to get all my product and ship it over there, and just craziness. By the third day, we outsold him. We were in the same thing, and we outsold his company versus our company. And this is direct to consumer. We outsold him 2 to 1. He's like, oh, wow. And so from then we made the investment, and that was a great relationship, because they were actual distributor into the outdoor community. So they did retail, and they were also in the military fields. So I started working on military programs for our product. So one of the things that we were going to do is my case was going to be on every soldier. Like, I was working on that program. Obviously it didn't finalize because military takes forever, but that was it. Now we started to ramp really high. Like, it took off from there, and we were doing really well. We had our offices. Our team had grown to like 20 people. And then I had the issues with the factory. Now, with the issues with the factories, we lost a lot of retail business because we didn't deliver on time. And so that's why I told you guys, like, one of the things lessons learned is make sure your factory can deliver the product. So once I lost that, my investment group and my partnership with these guys kind of went sour. And it was no one's fault. It's just the way business is. Well, it was the manufacturer's fault, but I mean, the relationship between us. So then I was like, all right, Steve, there's a lot of demand and I need to fill it. And these guys don't really want to do that anymore. They've kind of pivoted as a company as well. So I had to go raise another round of capital. And this one turned out to be really good because I got 2 birds with 1 stone. I got a sales team. So these guys were doing sales in the outdoor industry, and they were killing it, like hundreds of millions of dollars in sales to all the major companies that I want to sell to. And they did outdoor Bluetooth headphones. And like, I'm talking about a big company. And then the other side, there was two partners, right? There were two different people. The other guy was a distributor. So not sales, but he did distribution and logistics and operations. So he would take over all operations, logistics, and accounting. So all I had to do was worry what I did good, which is operations and manufacturing and product, scale the company. So that went well for like 2 or 3 years. And then, after my 7th iteration of trying to do and by the way, again, it's when you're trying to grow a product company. And so if you have, a couple of different products, every product costs money. And so if I want to scale and do another product, it would take another investment. And they wanted to keep it simple. And I was kind of burned out already. It's been, I wanted to do different projects. So they acquired the company from me and just let it just kind of do the same thing. And so that's how I exited that company.
And after having gone through this acquisition, how would that have changed the way you looked at investment or relationships potentially earlier in your career? Like if you were starting again with a hardware company that was doing retail, what would you be looking for now as far as investors, partners, et cetera, because of this incredible acquisition you just made?
All right. So the one thing I think I would have done better was focus on the actual product and make sure I have the investment money to go ahead, get me from at least two life cycles. For me, remember, I had to change every 2 years. So at least 2 life cycles so I can build up the whole team. Make sure that the investment that I had in my team was valuable, that they were going to help me grow. And so sometimes you have to raise a little bit more capital to make sure that you can get that high-end talent or good talent. I think that's it, to be honest with you. Like, I think that those are the 2 things for me that if I would have done it again, I would have done better, would be, get a little bit more capital and make sure that we execute on our marketing product and make sure that the team would have been a little bit better.
And how does one actually go about diligencing a potential manufacturer? Like what is that process?
That's another hard question. So remember, for me, it's really on the skill set of what your product does, right? So if your product is an IoT, you want to make sure that you're dealing with a factory that understands IoT. So, what processes they're going to use, what firmwares, not firmware, what protocols they're going to go use. And it just goes together. Like once you identify what type of product, either find like products. So I'll give you an example. When I first started Alibaba, I would go on Alibaba and check what type of people are doing waterproof cases, or I would do battery cases or solar cases, and I would contact some of those guys. The way I found mine was just weird. I was in China. I was serving, I think it was 15 factories over 3 weeks, maybe 2 weeks. And so all the factories did different things well, but I didn't find like a good connection of what I wanted. And I was in the lobby of the hotel, and this is outside of Shenzhen. And I meet this guy, and he's like, hey, and he spoke really good English. And, I'm like, oh, I get to talk to somebody. And he was actually one of the owners of a major factory that did a lot of the product stuff for Best Buy. And so I went to their factory the next day, and that was it. They could literally do everything I wanted them to do. So I got lucky. But that's actually really hard. Finding a manufacturer that A, you can trust, B, has all the skill sets and the process, and C, able to make sure the product is what you say you want it to go do. And remember, you can deliver a product just with an idea and just a little sketch on a napkin, but you can also do it the way we did it, which is where we fully designed it and just gave it to them to contract manufacture. So it all depends on where you are in the process. But that's very difficult. That you're definitely going to need some help with that. And by the way, if you have the opportunity to go there and meet all these people, I highly suggest you do so.
Well, Steve, thank you so much for your time today. This was a great insight into why I do software. Good luck. Thanks again for your time today. Great answers. Bye.
Bye.
And everybody, Carlos is going to pull up the slide to go through Global Pool so that we make sure any questions you guys have that have been coming up, we can answer them. I see quite a few questions around applications continuing to come up. So we'll have another few potential countries joining Global Pool in the coming week or two. But right now, we're up to 63 countries that are going to be doing Global Pool competitions. And that means you are going to go on EWC Accelerate and see the 2 additional deliverables if you're growth stage and the 3 additional deliverables if you're idea and early stage that need to get done in the coming couple of weeks. We'll be selecting the top couple of hundred from Global Pool in the next 3.5 weeks. So we're really excited to get the first accelerator started with you guys over the summer, and it's really going to be a lot of fun. For those of you in country competitions, you do not have to do additional deliverables unless your national organizer recommends it. But as we've said before, all of you doing the EWC Accelerate deliverables just to prepare you for the national competitions, it's a great idea because many of the questions that we're starting to get back from the judges are very aligned with things that you will be doing as activities to get those deliverables done. So it'll take a couple hours. If it helps to prepare you and make you more competitive, do it. Okay, if I can change location, is it possible to compete in a different country competition? If your company changes where it is registered, you will have to contact the EWC team and have them hard code change the registration site of your application so it goes into a different country competition, but that means completely separate company registration. So it's possible, but you need to look into that. That's the best answer I can give. Are there other questions? Because Matthew and a couple of other people on our team are looking at the discussion board every day on the EWC Accelerate site. So other questions, Matthew, Carlos, that you think would be helpful right now? I know a couple of people have inquired around the deadlines changing. So the deadlines change because quite a few of the national organizers have never done a virtual competition before. So we decided to give a little bit more time to have them manage applications and support them to make sure that they got the word out, because the normal ways that they would get the word out, you know, things have changed a little bit. I don't know if you've noticed. There was not a meeting this Saturday. We do every other Saturday. So there will be one coming up this Saturday. Hope you can join us. Carlos, questions that have been coming up for you or Matthew on the discussion board, or anything that's come to mind that would be helpful?
You just answered, Susan, the most recent question that came in on the Q&A, but just as, you know, reiterating statement, June 12th is the deadline for application submissions again. So that was pushed, and our deliverables also reflect that adjusted calendar deadline.
And I think one of the really exciting things as we start looking at some of the incredible national partners that we have in countries all over the world, each of the national partners are using the same rubric to determine the winners, but they may have different additional documents or thresholds that they may ask you to comply with. So I know in some of them, they're going to be doing one national pitch event that's going to be of the top 20 that get to pitch at that to get to the top 1 or 2. In others, they're doing regional competitions. So there might be 3 or 4 or 5 different events between your small regional all the way through to a national competition. A good example of that would be India and potentially Nigeria and some of these countries that have 20,000+ applications. So understanding the time commitment that's going to take to go through a national competition, whereas with Global Pool, you're just doing the 2 or 3 additional deliverables. So it's really to help just make sure that our team and then the judges who are doing the finalists for Global Pool really understand the full depth and breadth of your vision for the business and how you're executing. We don't believe in busy work. I know I've said that before, but everything we're going to ask you to do is about making your business better today, making it better for your customers, always. Matthew, are there any other questions that have come up in the discussion board that you want to make sure we address today?
Definitely. So there's a question around the pitch, and the pitch deck question is, I don't have access to a fancy projector and I'm worried that my pitch is not going to be good. Can I use something else like my cell phone?
Guys, I've said this so many times. I want you to think about conversations you've had, okay? And I've been in teleconferencing centers where they spend $1 million. And I've even been in a teleconferencing center where there's like a hologram, okay? There's crazy technology out there. But at the end of the day, how you present yourself and the stuff you're saying, you can literally do it on a phone and it won't matter. So when you think about what you're going to be sending into us for your video pitch and your deck, obviously with the deck, please spell check. It's the little things. Have somebody else look it over with you that has good grammar and punctuation, okay? But it doesn't have to be some incredible art piece unless you're, okay, I will put a little asterisk caveat to this one. If you're a design company or you specialize in design, it better be pretty. But for most of us who have businesses and we're solving a customer problem, just make sure it's clean and it's readable. And again, no spelling errors. And then for the video, we're going to have your deck. You're submitting somebody, you can, turn your camera around and press record. Just talk to the camera. That's it. It doesn't have to be anything fancy. And I've also said you can just record a Google Hangout or a Zoom meeting so that you can have your team members in the shot with you. You can actually have your deck moving through as a Google Hangout and send us the recording. And Google Hangouts, you can record for free and just send us the file. It doesn't have to be anything over the top, but the love and passion and vision that you're going to show us in the video, that's what we're looking for. We're not looking for, Hollywood or Bollywood production studio quality, nothing crazy. All right. So just bring it mentally and with your heart and you'll be perfect. Any other questions or comments, guys, for today?
Last one is, can my COO or CFO do the pitch since they speak better English than I do?
Definitely. My suggestion would be, and again, if you're using Zoom or Google Hangouts or whatever, and you're social distancing from each other, what you may want to do is have them do the presentation and then you can present some part of it. So maybe you do the intro part of where the idea came from and then they do everything else, or they just do the entire speaking point of the presentation, but be there in the video, okay? Show incredible diversity on your teams. I don't mean of race and color and gender alone, but the fact that you guys have people on your teams, I've seen some teams now, much like Steve was just sharing with us, where you have really incredible complementary skills and you've done different things in your lives. So together that team makes everyone better. If you can share that story and make sure that we understand how you're de-risking the opportunity, the investment, etc., by having this complementary team, that helps all of us get excited about what you're doing. And it really kind of allays fears of what could they be messing up on. If I know somebody on the team has done this in operations and finance and manufacturing, all of a sudden I'm feeling more comfortable about the business as a whole, right? So definitely you can have the best person on your team to present, do the pitch, but make sure that doesn't mean that that kind of overshadows the fact that you have a full team working on something. Okay. Well, with that, I mean, what a great day. We're so happy Steve could join us and share his story. It's so important for us to remember, no matter how hard it seems like whatever we're doing is, there's always somebody who's in a much more painful business. So yay, software and consulting. We'll see you guys on Saturday morning. If anything else comes up, you know, Slack group, discussion board, we're here for you. And anything else you guys can think of, just reach out on all of the different threads we have on the platform to get the help you need. And same thing, your national organizers, they've been in touch with lots of people, but you can imagine they're like pushing for the applications. It's the last break. So do what you can to reach out and make sure you get the answers to the questions you need. If you're not finding them, put them up on the discussion board. Okay. Thanks, guys. Stay safe, and we'll see you Saturday. Good luck. Bye. Thank you.